Imagine retiring early while mastering the art of trading SPY and QQQ options and collecting steady, safe, passive, and consistent income. Well, these two ETFs can provide you safe retirement income, and this is essentially all that you need. So this is going to be a full guide if you're looking to retire to trade just two ETFs and keep it safe and simple. So let me first off start with the market leaders of SPY and QQQ. They're market leaders for a reason. These two ETFs are two of the most popular ETFs, representing a majority of sectors of the US economy, and they consistently outperform many other investment options. ETFs are some of the best investments, okay? I'm going to first show you both of these ETFs. Let's jump into my portfolio. So my portfolio is at $3.5 million. My portfolio is generating 1 to 2% per week. I'm very happy with the results. These are very consistent results. And I want to show you how you can do something similar with SPY. Now, I'll be honest with you, the SPY is a fantastic retirement strategy. QQQ is fantastic for retirement. You can just trade these two to generate consistent income. It probably won't be 5% a month. I'm being very direct with you because these are very safe, very safe. The S&P 500, here's what it's made up of. It has technology, which is a huge portion, okay? We got the blue here. Technology is 33%. It has healthcare, it has communication services, it has consumer defensive, utilities, basic materials, all right? Financials, consumer cyclicals, industrials, energy, and real estate. Real estate's a very small part. Actually, real estate became a new sector recently. It's kind of, not recently, it was back when I was in college, but it is a fairly new sector. It was in financials before. But anyways, look, this is diversified. It has 500 companies within it. I tell everyone to basically, if you have a bigger size portfolio, SPY is beautiful to sell puts, to sell covered calls. You can generate passive income and you can supplement your retirement savings and bolster up and increase your income in retirement by selling options on SPY and QQQ. Look, SPY, it has a heavy holdings in the top 10. The Apple makes up 7%. That's a big chunk. Nvidia 6.5%. Microsoft, Amazon, Meta, Alphabet, all of these holdings contribute to SPY significantly, with 34% of its total assets being in the top 10. But still, this is a diversified ETF. You don't have to worry about single stocks. You can just generate income. Here's the market average 26 PE ratio. The expense ratio is nothing. It's nothing. It's $9 per 10,000 managed. So it's very reasonable, very low cost. It's the way to go. Look, I would sell puts for sure. Okay. I would sell puts and run the wheel strategy. They have very often expiration dates. Now listen, I think some people like short-term expiration days, and I think that's perfectly fine. If you want to go for short-term expirations, I think that's okay. It's extra work. I don't prefer it. I prefer 1 to 6 weeks expiration, but I personally like about 4 weeks. Okay. So I would go out for monthly income. You want monthly income to pay for your bills, for your mortgage, for your insurance, for your utilities, for your car payments, whatever you need the money for. Okay. SPY can provide you the safest. It's literally the safest income, the safest. Okay. SPY, you can sell, for example, you should go, the lower you go down, the lower the delta gets, the safer. Okay. The implied volatility is very low, 18. So the lower I go, like 560 right here, delta of 0.3 is still, it's a little high. Let's go to 555. Okay. We got 0.26 delta. Now that's getting a lot better. So on a monthly basis here, this is 1%. All right. Now the thing is though, with the wheel strategy, you can get 1% on selling puts, but once you get assigned, you can start running covered calls, and essentially the wheel strategy is selling puts to get in and then covered calls to get out. And I have many wheel videos on this channel. In fact, I focus on just the wheel strategy. So put some links in the description for you to check out more videos on the wheel strategy, but just type in Invest with Henry Wheel. I have a playlist on it as well. So listen, when you look at the put selling side of it, you get 1% a month. But once you get executed, and if you enter the stock, you can then do covered calls, which are higher income. I'll be honest with you, covered calls are higher income because you get upside. You get upside of the stock increasing in value, and then you still get the income collected from the covered call itself. So it is fantastic to sell puts and covered calls and to run the wheel strategy on SPY. Now, one of the best things is the passive income potential. By selling options on SPY and QQQ, as I'll show you an example in just a moment, you can generate passive income that can supplement your retirement savings, providing financial stability. If you look at the historical performance, it's a no-brainer. Over the last decade, both SPY and QQQ have delivered average annual returns of over 15%. You just pull it up for yourself, just Google SPY. They've delivered very solid returns, making them ideal candidates it's for long-term investment strategies. If you want the most simple, no hassle way of just generating income, it's going to be the ETFs. They are very, very good. Now, obviously, they're not as high returns as my other strategies, my bread and butter, selling puts, covered calls in the wheel. On single stocks, you know, I've made tremendous money on other strategies, but look, I think for ETFs, this is really safe. I would do this. Now, QQQ is going to be more tech focused. So you can see here, it's not going to be 33% on the tech. It's going to be 51. All right. So we got a lot more tech focused, and real estate is non-existent here. Financial services non-existent. It's really a lot of tech and communication services. So I like communication services a lot because that's obviously your metas of the world, right? You got AVGO, Broadcom. So these are really good. And now look, Apple's almost 9%, Nvidia's almost 9%. So when you guys see me trading single stocks, I'm not even deviating that much from QQQ. All right. QQQ is one of my favorite ETFs. I'm just basically doing what QQQ has, but single stock wise. So if you want less work, you can just do QQQ. Absolutely nothing wrong with that at all. So Apple, Nvidia, Microsoft, Broadcom, Meta, Amazon, Tesla. Costco kind of surprises me. To be honest, Costco kind of surprises me. But I guess Costco falls into the into consumer defensive, more consumer defensive. They also have some healthcare exposure and consumer cyclical exposure, but it's more so consumer defensive. All right, so the expense ratio here is a little higher than SPY. So here it's $20 per 10,000, so 0.2 expense ratios. $20 per 10,000. Now I would do something very similar. It's very low volatility. I would go for a sell put. Okay, I'm going to sell put, and then I would do. You can do many different expiration days. We can go something shorter term just to show you what's up with that. Well, let's go for 7 days. All right, this would be like the minimum I would trade. Look, for 7 days, you can go ahead and sell 15 delta would be too low, 475, 17 delta. This would be really safe. Now notice the implied volatility is decent. It's actually decent. QQQ has higher volatility as an ETF than some really safe single stocks. So the income here is good, and you need a lot of capital to run this strategy, right? So obviously, like I do like working with folks that have 50K to work with in their portfolio because it's much more easier to scale up from there, right? It's easier to do the safer strategies, which is my bread and butter, selling puts, covered calls in the wheel. It's just way more safe. All right. So I like QQQ because of the lower volatility, and compared to individual stocks, trading options on ETFs like SPY and QQQ can offer way lower volatility, reducing risk while maximizing potential returns. You still get good returns. And the best part of all is diversification. Investing in these ETFs allows you for diversified exposure to a broad range of industries, mitigating risks associated with single stock investments. So you don't have to do the guesswork. You just buy the ETF and do covered calls and selling puts in the wheel. You're good. And it's also very flexible. So it's flexible strategies. The option market offers various strategies such as, as I mentioned, the covered calls, the selling puts. It's all you need. It's really all you need for retirement, to hit your retirement goals. If you have low risk, your risk tolerance isn't so high, you want low risk. I don't work with folks that want high risk. I mean, it's okay. I'll teach you. But I personally don't make those type of trades. In my Discord community, I'm focusing on just safe. So it's also a time-tested approach, guys. Many successful traders have retired by consistently employing option strategies on SPY and QQQ, leveraging their market knowledge for financial independence. Like, you can really achieve financial independence off just these two ETFs. Now, just a quick mention about tax efficiencies. Option trading can be more tax efficient than traditional investment methods, allowing you to keep more of your hard-earned money in retirement, especially if you're doing some of those really long-term call options. I have some students that they get into QQQ and they sell an option that is a little bit over a year out, a leap option, a leap call option. When that leap call option expires, I'm 99.9% sure that it is long-term capital gains. So you can get some really good tax efficiencies, really good ones, all right? Obviously check with your tax professional. I do know a lot about taxes, but I'm not qualified or licensed to give advice on this topic, nor am I a financial advisor. I said in a lot of my videos. So check for yourself, but there's a lot of good tax efficiencies when you don't have a single stock. You have like an ETF, it can be it can be more tax efficient for sure. Now, also let's talk about scalability. You can scale this to millions of dollars, millions, because it's easy. You just buy the ETF, whether you're starting with a small portfolio, which is a little bit more difficult. You're gonna have to resort more to the spread strategies. I've taught a lot on this YouTube channel. I have a ultimate spread guide, so you can go into my small account trading playlist. So visit this YouTube channel by clicking the name, and then go to the playlist. You'll see some small account trading strategies, but in general, it's very scalable. SPY and QQ is very good for big portfolios. You can put a lot of money to work. I've students, doctors, dentists, professionals, business owners that put millions of dollars to work, and SPY and QQQ are fantastic essentially for that. So I want to say that this is a top strategy that I'm using in my Discord community. So if you're interested in being supported and seeing all my trades and being part of my live coaching calls, then feel free to visit that first link in the description and make sure that you use both of these ETFs to your advantage to create that safe passive retirement income. And thanks for watching, and I'll see you in the next video.